Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today we'll go through a regular market update. It's nothing really to put out for the earnings, not much action has gone on there. So then Joe's going to go through some charts. I think he's going to be looking at some international indexes, just kind of give you global picture on things. Just as a side note, next week I'll be going through the updated daily trades. So, I do that every quarter. So the quarter ends today. So, after the close today, I'll go through and start crunching all those numbers, but I'll have all that for next week's meeting. So, all right, let's get started. Okay, overall indice wise, you can see pretty much same. SPX did go into state 5. Russell's still in 5, and then NASDAQ's in 7 there. Overall, we've had it. We talked a lot about like transitions from 8 to 7 to 5. So we've been getting good up to this 5 point. We're not seeing a lot of follow through from 5. Typically, I'll go 5 to 1, sometimes to 3, but I think this would be, we start seeing these things move from 5 to 1. That basically give me a lot more confidence that we can break this downtrend that we're in. But if we see a stall, then with these 5s, then I think it's giving us a good indication. Overall, green pie, we're down slightly, pretty much flat, 72, 71. So not much movement there, pretty sideways as far as that. So let's take a look at the market pulse. See, we had a huge, big drop down. For the state 8s here, we're pretty much right at the state 1 level. So that happened back here too, right? So, this is kind of what last rally, big rally we had. So just be careful, just talking about like 7s and 5s. I know we got a lot of lines here. Okay, so the top one there's 7, there's the 5, and the 1's on the bottom. So you can see the 5's pretty much stalled out. We got a little follow through on the 1's, but pretty much things has turned over. We went down pretty good here. So here, where we are currently, 7's have already topped. So we're getting decent climbs with the 5's. All the way down here at the bottom, we're at like 2. So we're up to like 22. This last one we got up right around this area, 22.6, 20, 25. Yeah, so kind of in the same kind of area. I don't know if it's going to repeat this, this pattern that we had before. But I'd be careful about that. If these things aren't starting to transition to 1s, then I think it's our kind of indication. So let's see here. Down below, new highs, lows, still flatlined, nothing going on so far. We have all these dwell times in between. I haven't counted, kind of like days or anything, but this one's kind of mirroring the previous one. So we'll have to, keep our eye out on that. And the SMAs, I still need to do analysis on that, but it's there if you want to dive into it. So bullish bearish, you can see we pretty much topped out around 73. It's kind of been going sideways here. So I don't know if that's a good thing, but I think the key is just kind of watching those 5s to see if we get some more of the 7s going to 5 and some of the 5s going to 1s. That's obviously would be very bullish. We start getting some more ones. So, at that point, then we could start, when things get into state ones, then we can see new highs. So till then, this kind of, we've been flatlined pretty much the whole year with the new highs, as you can see. So with all these spikes, volatility. So, we've had quite a dwell time here. And we do have Powell talking this afternoon. I think it's 2:30, something like that. So, I'd definitely, tune in for that, see what comes out of there. So, all right, let's pull up SPX here. So went into state 5 on, the 28th, 2 days ago. Same kind of thing that happened with, the Russell, kind of had this downward action and it went to 5, which I just kind of find weird. This one, same thing, we had a down day and it went into 5. Normally, and that's just all the algorithm. You can see here, you had a nice up day and then 5. And this kind of coincides with, the last rally that we had in the previous earnings. So the 5 was the top. Not sure if that's going to happen again. But, obviously, we'll just have to watch kind of the key levels for the SPX. So I'm going to pull up the tool here. So this is the long-term downtrend top, that 4,100, so right above T3. So this is going to be very important area. If you can get up there and get through there, that's going to be critical. And then down to the downside, it's going to be that 3,800. So it's right near that stop loss, right below it. Our current range is 4,200 to 3,800. For our long-term Fibonacci stuff. So, that's kind of your key levels for SPX. And obviously, if we can, stay above the entry price, that's, very important, when it comes out of here. If it drops down below, then this becomes resistance. So, I think we're a little lower today, not a lot, but we'll see what Powell does. That's kind of the key things here. I did want to show you next state probability. So you can see, from 5, typically, if it's bullish, it'll go to 1 from 5. 38%, probability, since 2007, that it'll go into state 1. Everything else I would say is not good, 6 or 8, and whatever change over there. So not the best probabilities overall. So let's pull up the big chart here and we'll run through. This is our key level, pretty much right above the 200-day moving average. So that's at 40.50 basically. So, we're right around 4,100 on that, key level, which is, the downtrend for this move year to date. So that's, as I outlined on the modeling page, it's going to be, the key thing to watch there. And, down below is at 3,800. So you can see here. Sorry, I gotta. It's the 3,800 here. So, if we get down below, obviously, we can, if it breaks below 3,800, then, we have a chance to make new lows from there. But, it's been a pretty decent support level for there. It really depends on, Fed actions. I think it's really driving the market. And, we had some key inflation stuff come out today. Nothing really like a surprise. But I did see, a couple other interesting charts that I'll show you at the end here. So that's it for SPX. Russell, went into 5. Obviously, you can see, ran into resistance right here in our initial zone. So it usually goes up, retest, and like that. So we're down below. It's not following the typical, but obviously, this is going to be key level there, in the target 1-2 range over here. Just call it 1880, make it easy. Above that, it's our 1900, which is right below target 3. That's a current range for this 19 to 1700. 17 is off the chart below there. So really the only thing to key on the way down would be these target, the stop losses. And then, well below that is 1700. But like I said last week, I'd be very surprised if we got above, that 19, or, if we broke through on that SPX above that 41, these levels. I would, definitely be surprised if we did it, given everything that's going on in the market. So long term, let's pull up here. So here's our 19. We had a false breakout. We had some touching back here. Turned right around. You can see these candles back here. Not very strong indication there of bullish activity. If we make some more runs at it, then I could see possibly breaking it. But once again, I'd be surprised. We are above the, this is the 200. So this one hadn't been as good as SPX about being resistance, but it's still serving pretty decently. But we're way down. It's right in the top end of the range here, so we'll have to stay above. If we can stay above that 200, then maybe that 1900 can get taken out. But I just think it's giving all the macro backdrop, I just find it difficult. Maybe it's a range bound thing, because you can see down below here, the 17. I mean, this has been huge support for Russell. Trying to break below and never could really hold it. So maybe that's just kind of where we're at. Really tough to get above it, and still showing strong support down here. So that's it for the two indices here. Did want to point out 10-year. It's been kind of pretty much sideways kind of action right around. I mean, the Fed fund rate is 3.75, so it's kind of like gets below there and it'll kind of pop back up. Like I said last week, I just don't get how that's going to be below the overnight rate, but it is what it is. So seems like that's kind of the floor right now, unless we get some real big recessionary numbers, that could drive it lower. But I did want to point out, as far as like the Fed, we had slight movement, from last week is 75 for a 50. So now we dropped 10% there, and that moved to the 75 camp. So I think we'll get a lot more clarity from Powell today, hopefully. Still, I think it's going to be between these two. But we'll just have to wait and see what comes out of the Fed. So they usually let us know beforehand. As far as the balance sheet, not much movement, $4 billion. Nothing really happened the past week. So we had a big drop the week before and kind of a sideways action here. But, they are continuing. So, just remind you, last time they did this, we ran into a overnight lending rate crisis where they immediately started buying stuff. So not sure if that'll happen again. We're obviously much more elevated in the numbers, And let's set the, keep our guard on for that. Yeah, we're still way, I think the this the previous one was a 15% drop, from the high to the low. And the level for 15 would be 7,620,000,000,000. So we're about a trillion off from getting to that 15%. So they're making a little progress. Overall rates, I mean, the curve is still crazy inverted. See here, 3.7. This was, I guess, yesterday. So 3.75. Obviously, the 1 year 4.8. Want to pull up some charts here just to show you the long term. So this is, I found an even better chart. So I had back to 2000 before. This goes all the way back to 1970. So this is the inversion. So the 10-year and 2-year yield differences. So you can see where we're at over here. Let me get the tool. So this is where we're at currently. So you can see, I mean, if you go back, we weren't, oops, sorry. Trying to get the, oh, that's stamp. Sorry. Let me clear it. I had the wrong tool up. So you can see back here, we haven't been this inverted since, 1980 time frame. So I don't think it's a good sign overall. Just a lot of fundamental stuff just doesn't look good. So it's just hard to get bullish on the market overall with all this, demand destruction, all these warnings out there. Just to go along with that, this is probability of recession in the next 4 quarters by conducted by the Philly Fed. It's up near Joe, Philly Fed. So going back to 1970 again, it's the highest reading ever, 43.5 of professionals think we're going to be in a recession within a year. So you can see, a lot of these spikes, pretty much let you know. I mean, there's a couple, but, not sure if it's gonna, sometimes it's pretty early, but, just kind of news out there. I thought it was interesting. This is another one, kind of a interesting chart. U.S. money to M2 money supply since 1959. So this is just, the change in the amount of money supply. You can see over here, pretty much it's gone up every year. 94 with 0.3, but every other year, at least, like 5, kind of, I don't know what the average is, but, just kind of want to draw your attention to, this was our nice record high, since 1959, double any other year. So I think that's a lot of our inflation came from, that big 25 followed by 12. So, and right now we're on track to have our first negative year. So that's one way they can try and combat inflation, is pulling money out of the supply. So I thought it was very interesting. I think it's very telling. I think this will take a while to take effect. It's not immediate, but it's kind of interesting overall too. I mean, if their target is 2%, you would think they wouldn't be increasing the money supply by 13 or 13. You would think it'd be kind of more of a 2% type thing, but that's just my thoughts. So I think that was the summary for markets overall. Yeah, I'll open it up to questions, comments.
Hey, Josh, this is Dave.
Hey, Dave.
Can you put up a 3-year chart for the SPX? By the way, Powell's speaking, and I think he starts at 1:30. So I'm just going to watch the replay because I really don't think he's going to say anything
Yeah,
surprising today. I mean, the meeting is 2 weeks from today, so
right.
I'm not going to say anything. That's my opinion, but you can have yours. So what I'll be looking to hear what he says about the balance sheet too. I think if there's anything that he has any more clarity to, it'll be that, but we'll see. But
Yeah, that- they haven't
look,
really talked about that much. I mean, they're not even getting that many questions on it. I would think that would be a kind of a focal point people would be asking questions about, but kind of
yeah,
been,
I think all the questions are going to be targeting 50 or 70 bips, 75 bips 2 weeks from now. It'll be what everybody's going to talk about as soon as the meeting's over, or as soon as the interview is over. But look at the pre-pandemic, where we are pre-pandemic, and then where we are
Mhm.
now.
Yeah.
We're still quite a bit higher than where we were pre-pandemic.
Oh,
And
yeah.
is the pandemic over? Maybe mostly, but it still has repercussions over in China specifically. But so I think the Santa Claus rally, what's going to happen between now and the end of the year, and then in Q1, there's kind of what most of investors are thinking about, right?
Right.
Are we getting a 50 bip raise? I'm still in the camp of 75s because I don't think the Fed can even give a false hope of pivoting or whatever, but we'll see about that too. Anyway, I don't think I'm with you on we'll have to wait and see on the 16th what's going to happen. Now then, after the 16th, by the way, the next Fed meeting isn't until February,
Right.
so there's no December meeting. It's like February 1st. And no January meeting. I'm sorry, no January meeting. We're almost in December now. So the Fed is gonna determine, I think, where the buy and holders are gonna hold out until the Fed stops raising, and there'll be a lot of different comments on the hike amount and whether that's going to be good for stocks or bad for stocks in the 6 months, and then in the head time frame. So we'll just have to see what they say. I don't expect we'll see much today on the answer to that question. We'll not know until 2 weeks from Friday. And the jobs reports out Friday, that might also be a little bit of an impact.
Mhm. Yeah. Yeah, I mean, I kind of look at that for a lot of stocks, whether they're, still above their pre-pandemic high and things like that. I mean, I think Russell is too, a little closer. I mean, that's,
I think it's going to be a stock picker's year next year, and if you're just playing indices, I think it's going to be a hard one to make a lot of money.
Yeah.
I
mean, you can
totally agree with you there, Dave. 100%, 100%.
Yeah, you can see
Okay.
that's like that 1700 level we talked about. It's been really hard to break through. I mean, that's pre-pandemic high for the Russell back there. Yeah, so that's why it's having real problems getting down below that level. Yeah, it's good points, Dave. Yeah, we'll have to wait and see. I mean, some people are saying they're thinking it's going to be like a Jackson Hole type speech, like we still got a ways to go on inflation and that type of thing. But as far as data wise, I mean, with numbers come out today with like core, a little above what was expected, not much movement, drop wise or anything. Core PCE prices and this PMI is pretty crazy. It's just like gone off a cliff. It's back up here 75 in 2001. But you can see, excuse me, if we go back big chart, I mean, this is like 2000, 2008. I mean, we're down there in those levels back here too in the early 80s. So this is definitely not a good indication. This is Chicago PMI, so it's a lot of bad data, coming out. And it's just hard to, home sales, big drops. I think they said it's the biggest year-over-year drop ever or something like that. So just, their Fed's doing what they said they were going to do. Thanks, Dave. Anyone else, questions or comments? No, okay. Well, I'm not going to do the earnings. In 2 weeks we'll have probably roll out the next earnings plan. So we're really dwindling down. Yeah, it'd probably be the next the 14th. So next week I'll do the daily trades, quarterly update. So we'll have that next week, and then the week after that we'll have the new earnings plan to roll out on the 14th. So something to look forward to there. Okay. Joe, you got up on your computer and all that?
Yep, we give it a shot, Josh.
Okay.
Grab it here. Let's see. Everybody, here we go. So just a couple of charts, and actually I wanted to pull up, Josh does this from time to time, the new UI, the user interface. It'll be sometime in 2023. We hope sooner rather than later. But some of the things that we kind of like about it, and we may tweak what we add, but basically that market overview top left, it gives that's our pile of indices and other goodies. But you got closing price, the state we're in. What we like here, just on a quick look, is that you get current days in the state, you get average days, in the last 15 years. So you get a sense for where we are. Here you can see the UUP just moved into state 4 last night. But then, the current move in that state, the maximum move, the widest move that we've had in that current state versus where we are now. And then this gives you, just the average move in that state over the course of the 15 years. We don't have number of occurrences. You can, get that when you go to the individual page, but it would just kind of like that. People who don't understand Delphian, this is going to be Greek to them. They're not going to have any idea what the heck it means. But for those, who are familiar with, what the numbers mean, I think that's a pretty good little snapshot for everybody. On the right side, I actually haven't used this much yet, but it's really an idea generator. We are big believers in the options product. And so, we just basically are giving people a lot of ideas when you get extraordinary option volume. I think we give you the 20-day average, and then we're looking for a multiple, I think, of 3 times that, and that's what populates this list. So if you're looking for some ideas, go in, these are live links, go in, do some homework, and maybe you find something. Our sectors, again, go ahead, Dave.
Yeah, could you just go back to what you were just saying about the current percent move? That's just for the current current column, the current days column, right?
Exactly. So
okay, so is there one also for, is there a percentage for the average also to compare that to, or not? I'm not sure what that max percentage move is. That line.
That's as far as we've gone. So let's say NDX at one point was up 1.5 or 1.45% in state 7. It has backed off and is currently 1.69% below the signal.
I see. Okay.
Okay, so it's basically your range inside of the signal, and we're looking for an average move in state 7 of 5.5%.
Okay.
I
Thanks.
assure you, it took me a little while to get used to it too, Dave.
Yeah.
So, but I think once you get used to it, it's a pretty good, just quick look with a lot of information.
Are you gonna have like a rollover, like if you put your cursor on the column heading or something, would there be a little like that describes
Yes.
it? Okay,
We definitely will. I mean,
Okay.
there's one. We've got work to do, but yes, we will.
okay. Thanks.
And same thing with, so you're welcome. Same thing with the sectors. We're going to change the implied vol level here, but current days, average days, I think for those of you who believe in the Delphian stuff, there's some of the stats that I love to see. Market pulse, Josh has talked about the highs, the lows. We did add the dates, to get a sense for when the extremes happen. Daily trades, earnings trades, and then the state transitions. I think I mentioned a couple of weeks back, I'm trying to do some homework on, the various state transitions and what it means, for the next 30 and 60 days in the market. But we've got them posted here. That this is on the all symbol list. So I think that's about 4,500 symbols. And then just the liquid list, much narrower snapshot of that. The all symbol list. What's that, Josh? A little over 300, I think.
Yeah.
So anyway, just bringing that up. We continue to work on it behind the scenes. A couple charts. This actually was the one index that went into, state one last night. So that's why I pulled it up. Now, the XLI is kind of a mixed bag. It's the industrials, but when I say it's a mixed bag, I don't think there's any stock in the index that's more than 4%. You got Honeywell, Microsoft, NVIDIA. No, I'm sorry. Honeywell, UPS, Union Pacific, Boeing. And as I pointed out, I think last week, this index has probably run more than any other, from the lows late September, mid-October. It was up 21%. So we pulled back a touch. Find it interesting, and you can see going back here in March, those state one signals were not good signals. So, I think it might be, worth keeping an eye on. The one thing about this, where were we? Yeah, 36 days. So this is suggesting that for the next month and a half of trading days, this thing's, going to be doing all right. But again, the last signal was not ideal. So, but I do, when we transition, like to go in and check out some of the different indexes. So that's the industrials. Here's another one that caught my eye, and this would not bode well for the market. You got Apple rolling into state 8 last night. So, some of you probably noticed that if you were into the system today, but here we are. And, from a chart perspective, it's just, looks like a fairly innocent pullback to me. We got a trading range, just from 130 to 155, something like that. But, certainly, from my perspective, bears watching. If Apple is going to, and the average move down was at 13%, I think. Let me see where average one down. Oh no, not 13, but 7.5%. Still, if Apple's going to go down 7.5%, obviously, I would think for sure the market's going to have some trouble. So keep an eye on that. Amazon, is one that it's, just such a big stock. We've been talking about it a little bit. It obviously didn't respond well to its most recent earnings. It's in a couple of those indexes or sectors we've been talking about, the consumer discretionaries. We've got those charts pulled up, but they're just kind of moving sideways. Just another one I say keep an eye on it. Traded low, to a new low recently. And again, if that thing's going to, give us some red candles here, it's probably not going to bode well for the market. So there were just a couple things inside of the platform I wanted to point out. In terms of world indexes, Josh and I were taking a peek. Kind of surprising with all the negativity we hear about Europe and, the dark winter that's coming, how, a number of their indexes have fared. So there's the FTSE 100. I was darn surprised when I saw that this thing's trading darn near its highs. So I don't know what that says exactly. I'm not sure of, the total composition of the FTSE 100. So maybe it gears towards energy, which, would certainly help the index, but it's way up there. And maybe it speaks to, again, I'm not certain, but a little bit of a PE expansion, for European stocks. Maybe, that's why they seem to be holding up very well. But you can see, coming out of the COVID low, pretty insignificant pullback, in the subsequent couple of years. There's the DAX. DAX had a little bit more, I'm getting close to a 50% pullback coming out of the COVID lows. But boy, has it been on a tear recently, huh? So just, personally a little surprising, just wanted to point it out. The flow of international capital finds different homes, and some of that seems to be heading overseas, which, surprised me a little bit. I don't know, SIBO puts together some pretty good indexes. This is a UK 100, so it just pulled that up. But again, remarkably resilient. There's the next couple. Here's Hang Seng, and then the Korean index. They have fallen off a cliff, but they've had a significant bear market rally in the last couple of weeks. Both this is Hang Seng, and then here is, I think, the Korean index. Both of those have, had pretty good rallies. Just think they bear watching. Hard to say whether they're just that bear market rallies or whether, maybe coming out of the Hang Seng, you got a V bottom there. It looks like one. Whether it turns out to be one, only time will tell. But I would try to keep an eye on the Hang Seng. And this was the Indian market. Couple indexes there. This one, they also got the Nifty 50. Trading at highs off to the races. So just a couple things I found interesting.
Mhm.
I had these pulled up. UNH, it's in, we talked about that before, United Healthcare. It's the largest component from a weight percentage in the Dow. It's also, big in the healthcare sector. Nothing really new in it. It's just kind of hanging in there. It's held up pretty well. Just had that pulled up. Goldman Sachs is, mentioned a couple of weeks ago, the second largest weight in the Dow, and kind of interesting that it rallied pretty significantly and then rolled into state one. So clearly the street liked their earnings. Whether it's going to be able to hold these recent lows remains to be seen. But because a lot of people tracked it down, I mean, Josh and I don't pay too much attention to it, but it's the average that's out there. Keeping track of these couple. It's three stocks. It's United Healthcare, it's Goldman Sachs, and then Home Depot is, I think, 9% of the Dow. So, those big stocks to me, bear watching, especially when we get transitions. As I said, the consumer discretionaries, they're just kind of sideways. XLP, a little bit more action, to the upside. And, in a bullish state, XLP, and here's healthcare. So, which has been quite strong and, has been in state one for over a week. So there are just a few charts I wanted to pull up. Happy to take on any questions or comments. If not, I'll turn it back to you, Josh.
Yeah, I got one for you there too. On the Apple chart, I overlay Apple on the SPX a lot, and it tracks really close. The Apple chart tracks really close to the SPX chart, except for just recently, as you mentioned, it just dropped into state eight. I think on yesterday's news that Foxconn over in China is not going to produce as many iPhones as they actually have orders for. So the point is that Apple's dropping faster than the SPX has dropped in the most recent time frame. And I don't think that's, like you said, that's not a good thing for the overall index or the overall market, because I think a lot of people follow Apple as, well, if the Apple's up, the market's up. If Apple's way down, the market's probably not going to be up. So I just thought that was interesting. And the news for Apple coming in the next time frame ahead, whether that's 2 months, 6 months, or whatever, is more negative than good. So, again, I'm not that
Any
optimistic.
dark clouds? Another dark cloud, huh, Dave?
Yeah, yeah. But at the end of the storm, there's always a recovery. So just waiting for that to happen, and making trades that are defined in the risk in the meantime.
Yes, and in terms of rates, I'm in the 50 cut camp, not the 75 cut camp, but
Yeah.
we shall see. I was thinking of you, Dave, with these rallies in like the Hang Seng. I mean, do you think, I don't know whether that'll have any legs or not, but if it did, do you think it would impact, the area that you really track closely, the semis?
Not too sure. I think that market more or less tracks sentiment on politics. Are they going to regulate?
Geez, how the heck do you do
not?
that? Oh, I'm sorry. Go ahead.
No, that's I don't really have a great answer to that. Although my personal thought was that index is more volatile because of what China says big tech is going to regulate or not, and our trade policy with China. So I don't know that it's stocks in the index that are the prices are reflected on how well the stocks are going to do as much as what the policy is going to be. That my own thought there. So yeah, to answer your question on the semis, I don't think so. I think the semi sentiment is going to be down until people think that the economy is going to turn to start a new bull run. And that's the question that seems to be up in the air. How far out into the future is that?
Got it. Okay. Thank you.
Be interesting to hear what other people are thinking out there. Come on, folks. It doesn't hurt to express an opinion. Just saying.
All right. Well, thanks everybody. Josh, back
Yep.
to you.
Okay. Yeah, thanks, Joe. Thanks again, Dave. Yeah, I think that's about it for all this week. So if there's no other questions, we'll end it here. Thank you
And
all.
Josh,
Yeah.
I'll add just one thing. Sorry. Dave talked about the non-farms on Friday. The market, I think, was looking for a little over 200,000, so 210 grand. And then, as was suggested, there really are, with the exception of, I think, next Tuesday, there are a lot of numbers every day that could move the market. But first things first with the Powell speech.
Yep. Okay. Well, thank you. Thank you all. See you next week.
Bye, everybody.